Hi, I'm Caroline, and for my final presentation, I'm going to pitch you on why Ford is a buy. In today's presentation, we're going to run through Ford's company background, look at its place in the automotive industry, look at its recent performance, then get into its valuation, so looking more at its DCF, multiples valuation, and then get into an analysis of comparable companies such as GM and Fiat Chrysler, and finally gives a couple last reasons on why Ford is a definite buy. So looking more into Ford's background, we know it's a automobile company. It manufactures and distributes and sells cars, trucks, tractors, automobile parts, and accessories. They, along with the automotive segment, they have a mobility and a segment called Ford Credit. Their IPO is in 1956. And some recent news on Ford, they're planning to phase out passenger cars and shift their focus to pickups. In addition, they have a new CFO coming, Tim Stone from Amazon, that's going to be effective June 1 of this year. The automotive industry today is kind of struggling, some would say. The Russell 3000 Auto and Auto Parts Index has been up 3% year to date, though. Analyst Joseph Spack sees sales to be declining, down 3% from 2018. However, he also notes that if they remain disciplined on price and mix, they're moving more into kind of the sports utility, SUV, and pickup models, then their profits won't be impacted too badly. They should make more money selling trucks than sedans, which is good for Ford because that's exactly what they're doing with their new cost-cutting plan. Ford's recent market performance this year has been on the rise, though they faced a tough stretch of underperformance. We're seeing the trend upward now. Though analysts say it's on a road to nowhere, we can see a 40% growth increase year to date. And also for the industry, as a large cap automaker, the macro backdrop is looking good, with a growing economy and consumer consumption pretty steady. Moving on to the valuation part of the presentation, I want to highlight several key parts that I used in my assumptions. So first off is the WACC that I got from FactSet. It's 5.3. Moving on from that, I used a terminal growth of 5%. I increased this a little because of a very important piece of news that was released about Ford. They're introducing a cost-cutting plan that I mentioned earlier, where they're decreasing their line of sedan cars down to only 2 models. So they're going to see a lot of decrease. They're going to see a big decrease in capex, cuts in costs that will eventually increase their growth. So I wanted to increase terminal growth. Tax rate is 20%. And like I said before, the increase in working capital is actually going to be a decrease because they're not making as many sedans, and increasing a little bit their production and more so in trucks and SUVs. And lastly, capex to sales is 1%, again because of this cost-cutting plan. So after reviewing the assumptions I made, I wanted to look at some of the other sheets that I used in my valuation of Ford. Here's the income statement and balance sheet, as well as key items per share. That kind of looks at sales per share, in a condensed version of the income statement and balance sheet. Here's the condensed version of the cash flow statement. You can see that I used it year over year, as well as the last 5 quarters. Next is the full income statement and balance sheet that you can look in the Excel file for more detail, along with the cash flow statement. And here's where I'm kind of making estimates about my financials. I talked to you earlier about the assumptions that I use to make my DCF, but here's some of the roots that kind of allow me to flesh out the DCF. So here we come to my DCF. You can see in the top left the assumptions I talked about earlier. This led me to arrive at a stock price estimate of $12.36, up 19.28% from the current market stock price of $10.36. So now looking at the relative valuation, I decided to use The median of Ford's competitors in my multiple, my EV to EBITDA multiple, and arrived at a implored forward value of $17.05. Combined, this gave a potential upside of 65% from the current stock price of $10.36. And when combined, the DCF estimate with the relative value price estimate, I arrived at a price target at $13.53, up 30.62% from the current stock price of $10.36. So when doing research, I found that Ford's top 3 competitors were Fiat Chrysler, GM, and Toyota. Both are extremely large companies. They range from market caps of Fiat's is about $28 billion, GM's is about $52 billion, and Toyota's is all the way up to $194 billion. It's actually the 6th largest company in the world, depending on revenue. So looking at this graph that I got from Bloomberg, you can see the Ford's competitors and its price compared. Ford is in white. And you can see that although the competitors have outperformed Ford in the last year, the white is on the rise, you can see right there. And it's actually meeting GM that has kind of declined in the last month or so. So lastly, I'm going to talk about reasons why Ford is a buy. So for more quantitative reasons, you can see the rising PE ratio of Ford. It's about 13.34 to date. It's coupled with the news of their new self-driving initiative with Volkswagen signals growth. In addition, investors would like that Ford gives out a really high dividend yield of 7%. The gross profit is 9.3%, up to 9.8% year to date by Bloomberg. In addition, EPS growth year over year is on the rise. It's projected to be about 5.9% by next year. And lastly, like I said earlier, the Ford's intrinsic value is really above its real stock price. It's valued around, for my DCF, it was around $13.53. In addition, more qualitative reasons to buy Ford include its cost-cutting program. It's going to boost profits by dropping the sedan line in North America. They're dropping 2 models. They're focusing on feeding the healthy parts of their business and dispose of these marginal operations that aren't bringing in a lot of cash. This allows for more disciplined pricing. They're going to cut $25.5 billion in costs by 2022. Then this information is from Reuters. With the new CFO, Tim Stone, from Amazon, he's going to rework their Ford's core business, introduce a new, more consumer-led approach, and they're thinking about adopting third-party lending options. Finally, their new deal with Volkswagen, they invested $1.7 billion in Ford's Agro subsidiary. They developed new artificial intelligence for these self-driving cars, and that can lead to a potential rise in valuation if investors are generous. In addition, Ford does sell more trucks above these sedans. It accounts for 70% of their sales. So by focusing more on those production of those trucks, especially F-150s, it can push Ford to a definite market leader. So I've discussed kind of what Ford is as a company, their place in the market, automobile market, and their performance, discuss reasons why it's a buy. And overall, I just want to highlight that Ford can be treated as kind of like a show me company. Like, they've been successful in the past, super steady company, steady growth looking forward. They've had a tough stretch of underperformance, but that's exactly why you should want to buy Ford. You're going to be doing what the rest of the market isn't doing, and if all these initiatives that I've discussed do well, then Ford could be a really good investment.